All right, so let's get right into it. What happens when a real estate data giant, a company that's spending billions on a new venture, gets called out by a really powerful Wall Street investor? Well, you get a very public, very high-stakes corporate showdown. And that's exactly what's happening right now between CoStar Group and the activist investor D.E. Shaw.
And it all kicked off with this fiery accusation. D.E. Shaw didn't just, question CoStar's strategy. No, they came out and accused the company of actively trying to obscure its performance, calling their new financial reporting a hide-the-ball exercise. I mean, when a multi-billion-dollar hedge fund uses language like that in public, you know things are about to get serious.
And make no mistake, this isn't some quiet disagreement happening behind closed doors. This whole thing has exploded into a full-on public war of words, with both sides desperately trying to win over investors.
So let's meet the two players in the ring. On one side, you've got CoStar Group. They're the incumbent, a massive, established force in the world of real estate data. And on the other side, the D.E. Shaw Group, a really powerful activist investor that's famous for shaking things up from the inside.
Now, you might be wondering, what exactly is an activist investor? Well, think of it this way. They buy a big chunk of a company's stock, not just to make a profit, but to get a seat at the table. They use that ownership to put public pressure on the company's management to make big changes they think will make the stock worth more.
So let's break down what D.E. Shaw is actually claiming here. What is their case against CoStar's management? What's got them so worked up?
It really starts with this number, $3 billion. That's how much D.E. Shaw estimates CoStar will have spent on its new residential real estate website, Homes.com, by the end of 2026. It's a massive bet, and the activist investor is convinced it's being completely mismanaged.
So in a letter to CoStar's board, they laid out some really serious allegations. They claim the company is just burning through cash on this huge Homes.com project, and that it's destroying value for shareholders. But the real kicker is this. They accuse CoStar of reducing transparency, of deliberately stopping the disclosure of key numbers like net new bookings, to hide how things are really going.
And D. Shaw says, hey, don't just take our word for it. Look at the market. They point to a recent earnings call where CoStar's management refused to provide some of that key data. Well, investors got nervous, and the stock took an immediate 9% nosedive the very next day.
And that 9% drop, that wasn't just some abstract number on a screen. It translated into nearly $2 billion of shareholder value vanishing. Poof, gone in a single day. For D.E. Shaw, this was the ultimate proof that the market shares their concerns. Oh, but CoStar was not about to take this lying down, not at all. They came out swinging with a powerful and really direct rebuttal. So let's take a look at their side of the story.
Their first move? To label D.E. Shaw's entire campaign as highly misleading. A really clear, forceful denial right out of the gate. That pretty much set the stage for their point-by-point counterattack.
And on that huge accusation of hiding the ball, CoStar did a complete 180. They argued their new way of reporting, which separates their residential and commercial businesses, actually offers more transparency, not less. They say it allows investors to see exactly how each part of the company is doing. And then they went on the offensive. With this statement, CoStar directly challenged the motives of their accuser. They basically said, hey, maybe D.E. Shaw should look in the mirror before they start talking about transparency. And here is the heart of their counteraccusation, a potential conflict of interest. CoStar pointed to public records suggesting that D.E. Shaw owns a teeny-tiny 0.22% stake in their company, while holding a position nearly 4 times larger in their direct competitors. The implication here is pretty clear. Maybe this whole campaign isn't about helping CoStar at all, but about helping its rivals.
So, okay, we've heard the he said, she said. Accusations are flying back and forth. Let's take a step back from this war of words for a second and just look at the cold, hard data. Because, at the end of the day, the numbers usually tell the real story.
Now this is the data CoStar wants you to see. Their huge investment in Homes.com? Well, it's leading to some absolutely explosive growth in users. Organic traffic is up 134% year over year. Leads for their paying agents are up an incredible 187%. This is their evidence that the strategy, as expensive as it is actually working.
But, and this is a big but, this is the data D.E. Shaw wants you to see. While all those user numbers are soaring, the company's bottom line has taken a massive hit. Net income for the whole year just plummeted from $139 million in 2024 to only $7 million in 2025.
This is the cost of that growth, and it's the very core of the activists' concern.
And this brings us right to the fundamental conflict here, the thing at the very heart of this corporate showdown. It's a classic business dilemma, just, amplified to the tune of billions of dollars.
It all boils down to this. On one hand, you have CoStar saying, look, we're playing the long game. We have to invest heavily right now to build the #1 residential platform for the future. But on the other hand, you've got D.E. Shaw basically saying, that's great, but what about right now? We demand profitability and returns for shareholders today.
And as far as CoStar's management is concerned, the train has already left the station. They're arguing that if they were to abandon their high investment strategy for Homes.com at this point, it would cause irreparable harm to the company. It would essentially mean their multi-billion-dollar investment was all for nothing.
Which leaves all of us with the big billion-dollar question at the center of this whole fight. Is CoStar's massive spending spree a bold, visionary investment that's going to pay off huge in the future? Or is it a reckless drain on shareholder value that needs to be stopped right now? The answer to that question is going to decide the future of a real estate giant.